What if I told you that every single year, thousands, maybe even millions of notaries are making a huge mistake on their taxes, and it's a costly one? We're talking about a mistake that could be siphoning off a big piece of your hard-earned income. So today, we're going to play detective. We're opening up the case file on the great notary tax investigation to figure out what's really going on.
All right, let's just cut straight to the chase. Are you a notary public? And if you are you paying a 15.3% tax that you might not even owe? Think about that for a second. If you're nodding your head yes right now, well, there's a very good chance you've been giving the IRS way too much money. And we're about to find out exactly why.
Okay, so let's set the scene of the crime. We're calling this the 15.3% self-employment tax trap. And you know who the main culprit is? It's often the very tax software you're using. See, these programs are designed to just assume that any income you get, especially on a 1099, is business income. They just slap that 15.3% tax on it by default. It's a simple, widespread assumption, and for millions of notaries, it is completely wrong.
So how do we crack this case? Well, like any good detective, we have to go straight to the source for evidence. We're going to deconstruct the actual U.S. tax code. This isn't about guesswork, this is about finding the forensic proof, the hard evidence that could completely change the way you file your taxes forever.
You know, this whole entire investigation really comes down to one single crucial definition. What exactly is a trade or business? The IRS says if you're in a trade or business, you've got to pay that self-employment tax. A huge Supreme Court case, Grotzinger versus Commissioner, basically defined it as something you do continuously and regularly with the main goal of making a profit. Now keep that definition in your mind because it's everything.
And here it is, our first piece of major evidence, pulled directly from the Internal Revenue Code itself. Section 1402, this is the big one. It says that the definition of trade or business shall not include the performance of the functions of a public office. Whoa. Wait a minute. That is a gigantic, massive exception right there in black and white.
So, the million-dollar question is, does being a notary count as holding a public office? Well, let's just look at the facts, the evidence. You're a quasi-public official, commissioned by the state. You can't just charge whatever you want, you're bound by state law and fee caps. You don't have total freedom. You generally can't just arbitrarily refuse to help someone. And you're not really taking on entrepreneurial risk or running big marketing campaigns. For a lot of people, it's just something they do on the side, incidental to their main job. This doesn't sound like a typical business, does it?
Okay, if the last clue was big, this one is the smoking gun. This is the confession, straight from the horse's mouth. We're talking about IRS Publication 334, their own tax guide for small businesses. And listen to this, word for word. Notary Public. Fees you receive for services you perform as a notary public are reported on Schedule C, but are not subject to SE tax. I mean, come on, it doesn't get any clearer than that. That's it. Case closed.
All right, so we've got the forensic evidence locked down. The legal argument solid. Now, let's follow the money. Let's talk about the financial motive here. What does this little misclassification actually cost you? We like to call this the delta, the difference between what you're paying and what you should be paying. The number you need to burn into your brain is 15.3%. That's the self-employment tax rate. That is what you are potentially overpaying on every single dollar you earn from your notary fees. Think about that. It adds up, and it adds up fast. Just look at this example right here. Let's say you're in the 32% tax bracket and you made $10,000 in notary fees. If you incorrectly pay that self-employment tax, it costs you an extra $1,670. That is not chump change. That's a huge overpayment. That right there is the delta. That is real money that should be in your pocket, not the IRS's.
Now hold on. Before you get too excited and rush off to call your accountant, there is a major plot twist in this story. It's not quite as simple as just saving a bunch of money. See, there's a hidden danger lurking here, something we call the double torpedo. You have to know about this.
So here's the catch. Even when you correctly avoid that 15.3% self-employment tax, the income from your notary work doesn't just vanish into thin air. Nope, it still gets added to your adjusted gross income, your AGI. And a higher AGI can set off a chain reaction of other financial problems, especially if you're a retiree.
Okay, here comes the first torpedo. Your notary income bumps up your AGI. This, in turn, raises something the IRS calls your provisional income. Basically, it's your AGI plus half your Social Security and a few other things. Now, if that number crosses a certain line, and get this, these thresholds haven't been updated for inflation since 1984, if you cross that line, boom, all of a sudden up to 85% of your Social Security benefits can become taxable. It's a nasty surprise.
And Torpedo number 2 is all about Medicare. These are the surcharges known as IRMAA. Just like with Social Security, your higher AGI from notary work can push you over an income cliff. And I mean a literal cliff. Look at this table. If you make just one single dollar too much, going from say $129,000 to $129,001, bam, you could be hit with over $100 more in Medicare premiums every single month. It's brutal.
So we've laid out all the evidence. We've uncovered the hidden dangers. The question now is, what do you do about it? How do you actually use this information correctly? And most importantly, safely? Don't worry, we've got the playbook right here.
Okay, rule number 1, you have to segregate your income. This is critical. The fees you get for the actual Notarial act, that's what's exempt. But other stuff, like loan signing services, that's taxable. So you have to keep them separate. And that leads to rule 2, keep flawless records. Seriously, a separate bank account is your best friend here. Rule 3, stay on top of things. Tax laws change, like with the TCJA sunsetting in 2026. And finally, and this is the most important rule of all, talk to a pro. This stuff is complicated and depends on your specific situation. Don't go it alone. Get guidance from a qualified tax professional. It is absolutely non-negotiable.
All right, we've walked through the whole investigation. You've seen the forensic evidence, straight from the tax code and even from the IRS's own rulebook. You know about the potential savings, but you also know about the hidden torpedoes waiting for you. So the only question left is the one for you to answer. Does your tax return tell the right story? It might just be time for you to open an investigation of your own.